In this video, we're going to talk about the Simple IRA versus the Sep IRA for max funding. Now, the reason I wanted to go through these two plans and show you examples on them is because it doesn't always make sense to use one versus the other in every situation. So we're going to go through examples so you can see which retirement plan could work for you. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So before we get into the examples of the Simple versus the Sep, let me know in the comments below if you're trying to make the contributions into the retirement plan for this tax year or last tax year. And here's why this is really important. The Simple IRA, you have to have opened the plan by October 1st of the tax year you want to make the contribution for. So for example, if it's 2019, you have to open it up by October 1st of 2019 in order to make those contributions. Now the Sep IRA, you can do into the next year for the tax filing for the previous year. So you have until April 15th of 2020, including extensions, which can go all the way to October 15th, depending on how you're filing. And that would be contributions for 2019. So you could still be in 2020, open up a Sep, fund it for 2019. The Simple has to be open in the plan year. And that could change everything for you. If you wanted to make last year's contributions, last minute changes, well, you can't do that with the Simple IRA if you don't already have it set up. And that right there might have helped you answer the question of which plan you wanted to do. So now that's out of the way, let's talk about the contribution limits. Now the Sep IRA, you can put up to 25% of your compensation into the plan. And you have to put the same rate that you do for yourself for all of your employees. And the maximum amount that you can put into a Sep IRA is $56,000 for 2019 and $57,000 for 2020. But that takes into account your income because it is a percentage. So the maximum amount that you can take into consideration when doing that math is $280,000 for 2019 and $285,000 for 2020. And you're going to see that in the examples, how that math works out. Now with the Simple IRA, it's up to $13,000 for 2019 and $13,500 for 2020. And that is the employee side. So if you are the business owner, you're wearing both hats, you can still make that kind of contribution. In addition to those contributions for the Simple IRA, you're going to have one of two matches, either a 2% non-elective match or a 3% elective match. The elective just means that if you contribute, then you're going to contribute as the employer. Now, if you want to know more about the plan rules on either retirement plan, let me know in the comments below. I've also done other videos going more in depth into some of the rules with the Sep IRA and the Simple IRA. So now let's jump into our examples. And I'm going to go through different income levels so you can see when it makes sense to use a Simple IRA versus the Sep IRA. So we're going to put the Sep on this side, the Sep IRA here, and then we're going to put the Simple plan over on this side. And for our first example, we're going to show $50,000. So the Sep IRA can do up to 25%. Now we're talking about max funding these plans, so we're going to use 25%. So if our income is $50,000 and it's 25%, that's going to be $12,500. Now with the Simple IRA, I'm going to use 2020 numbers, which is the maximum amount of $13,500. So we're going to put in our $13,500. Now with the Simple IRA, we're going to have a 3% match because we're only going to be talking about the elective matching contribution. And that's because that's the maximum amount that you can put into the Simple IRA. So we're going to add an additional 3%, which is another $1,500, which is going to bring our total to $15,000. So the first example is pretty straightforward. We can put up to $12,500 into the Sep IRA and $15,000 because of those additional contributions into the Simple IRA. In the second example, we're going to use $100,000. With the same math as we had before, we're going to put in 25%. So that's going to be $25,000 into the Sep IRA. The Simple IRA, on the other hand, is going to be $13,500 because that's the max that we can put as long as we make at least $13,500. And now we're going to add an additional $3,000 because it's 3% of our total compensation, which is $100,000. So that's going to bring our total plan contributions for the Simple IRA to $16,500. And at this point, you might be thinking, well, the more money I make, it looks like the Sep IRA is always going to be the winner. That's not entirely true. So let's continue the example so you can see exactly how this works. So if we bump it up to $150,000, we can contribute up to $37,500 into the Sep IRA, and the same math of $13,500 and an additional 3%. So it's going to be 3% now of $150,000, which is going to be an additional $4,500. We add those two up and we're going to get $18,000. Well, now you can still see that the Sep IRA is the winner if you want to max fund this at $150,000. But let's bump it up even further. So now let's say that we make the maximum of $285,000. Now, $285,000 is the maximum amount that you can include in compensation for the Sep IRA. So if you earned $500,000, you couldn't multiply $500,000 by 25% to put that amount in there. First, it would hit the plan limit of $57,000, and second, you just can't do it. You have to use maximum of $285,000 in order to do the math. But for this example, we're going to use the maximum amount that we could put in here of 25%, which will cap us out at $57,000. So on the Sep IRA, it's $57,000 is the most that we can put into the plan. On the other side, we can still put in our $13,500 into the Simple IRA. And this time we're going to have an additional $8,550, which is going to bring the total amount to $22,050. So on the Simple IRA side, there's no cap on the 3%, the amount of income that you can have. It only shows up on the 2% non-elective. So if you're looking at the plan rules and you're watching this video and you're saying, wait a second, I thought you couldn't use more than $285,000 on the Sep and the Simple. It's actually only for the 2% non-elective on the Simple IRA. So if you're using a 3% matching contribution, there is no income limit. However, if you're trying to max fund this, the most compensation that you can earn and still get that maximum amount in is still going to be $433,333. Because if you multiply that by 3%, that's going to be $13,000. So as a percentage, if you put that in there, that's the max that you're going to be able to get. So the total amount that you can get into a Simple IRA, no matter what, is $26,000 per participant. So at this point, you might be thinking at $100,000, everything above $100,000 made sense to use the Sep IRA versus the Simple IRA. Let me give you an example of a scenario where it doesn't make sense to use the Sep IRA over the Simple IRA. So let's go back to our $100,000 example. So with the Sep IRA on $100,000, we had $25,000 as the maximum contribution. And on the Simple, we had $13,500 and an additional $3,000, bringing it to that total of $16,500. So our example, we had the Sep IRA at $25,000 max contribution and the Simple IRA at $13,500 plus an additional 3%, bringing the total plan contribution to $16,500. So now let's say that we're an S corporation for a minute. That means we have a choice between taking W-2 income and distributions. So if we reduce our total plan compensation and say that we're only going to pay ourselves $50,000, both of these numbers will be affected. But here's how that's going to look. It's going to go back to that $50,000 example because the amount that you can put into the Sep IRA, if you're an S corporation, depends on how much you're going to pay yourself as a salary. It does not include the distributions. Now, it doesn't mean you're making any less money. It's just how you're calculating that money, whether or not you're taking it in a distribution versus a paycheck. So by bringing this down to the $50,000, this $25,000 is going to be knocked down in half to $12,500. Whereas in the Simple IRA, you could still put in that $13,500. The only thing that's going to drop is the smaller of the two numbers, and that's going to be your 3% match, which would drop to $1,500, and that would bring it to $15,000. Now, making that small change affected the Sep IRA contributions a lot more than they did the Simple IRA contributions. So this is one scenario where you can still make more money, but doing a little tax planning, you can reduce your overall tax liability and get more money into the Simple IRA. Now let's take this a step further. Let's say that your spouse works for you and they're part of the plan. So with the SEP IRA, if you're earning, in the same example, $100,000 and you decide, well, I'm going to pay my spouse $20,000, so they're going to have $20,000 and I'm going to have $80,000. Even if you combine those dollars and put them into the SEP IRA, it's the same amount because it's always a percentage. But the simple looks a little different. So with the simple IRA, if you're earning $100,000 and you pay your spouse $20,000 and you pay yourself $80,000, that means you can put in $13,500 plus the additional 3% on the $20,000. That would be an additional $600, bringing the total plan contribution to $14,100. And on the other side, you could do that $13,500 plus an additional $2,400, bringing it to $15,900. That means we boosted it to a total savings of $30,000. Or you could have applied what we just applied a second ago to the S corporation, where you're taking partial distributions and paychecks. So let's say that you paid your spouse $20,000, you paid yourself $30,000, and you took $50,000 in distributions. So that would save you even more money. So you paid your spouse $20,000, you paid yourself $30,000, and you took a $50,000 distribution. That would mean that your spouse could save $13,500 plus the $600 3% contribution, bringing it to $14,100. You can put in an additional $13,500 into your own simple IRA, get a contribution of $900, bringing it to $14,400. If we add these two up for $28,500, and save yourself $7,065 on payroll taxes. Now, there is one last piece that you need to be aware of when you're looking at the contribution limits and trying to figure out this max funding bit. You have to pay attention to the contribution formula, especially if you're the business owner, because it is different for the sole proprietor versus a corporation like an S Corp. So you want to pay close attention to that. Now, I have done other videos on the contribution limits and the formulas, and really everything SEP and Simple related. But if you have questions, go ahead and put them in the comments below, and I'll be sure to answer them and do them on future videos if I haven't already done it already. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.